Have you ever wondered what it means when high-income shoppers start flocking to Walmart? It's happening, and it says a lot about where the economy is headed. Walmart's latest financial report reveals a sharp rise in discounts and more affluent customers choosing Walmart over pricier stores like Whole Foods. When Walmart thrives on heavy discounts, it's usually a sign of economic trouble. In fact, their revenue jumped 4.2% year over year, beating expectations, a trend that mirrors what we saw during the 2007 to 2008 financial crisis when Walmart's sales rose despite the tough economy. Today, Walmart is mostly a grocery store with over 60% of its sales coming from food. And since it's the cheapest option out there, more people are shopping at Walmart to save money. For example, I compared prices between Publix and Walmart, and the results were eye-opening. A can of Campbell's soup was $1.99 at Publix, but just $1.72 at Walmart. A dozen eggs cost $4.34 at Publix compared to $2.94 at Walmart. But the biggest shock was bread. $4 at Publix versus just $1 at Walmart. By the way, if you love saving money as much as I do, why not like this video? It's free. And don't forget to subscribe. I promise it won't cost you $4 like that bread at Publix. Walmart's capacity to reduce prices is both advantageous and contentious. While it benefits consumers, particularly during inflationary periods, it also exerts pressure on small businesses. Economic research has demonstrated that Walmart's presence frequently leads to the closure of local small enterprises, which struggle to compete on price. Small businesses are facing challenges with low optimism, limited access to capital, and diminished pricing power. Conversely, Walmart has the leverage to negotiate price reductions from suppliers, to the extent that some suppliers are required to establish offices near Walmart's headquarters in Bentonville, Arkansas. Walmart's current success is an indicator of economic vulnerability, as an increasing number of consumers from all income brackets are seeking discounts. Interestingly, while Walmart flourishes, retailers such as Dollar Tree and Family Dollar are facing difficulties. Despite their status as discount retailers, Dollar Tree's prices have now surpassed those of Walmart, and the company's stock has dropped by 33% year to date. The U.S. economy is exhibiting signs of stress, with consumer sentiment at its lowest since the 2008 crash, excluding the pandemic-related inflation of 2022. Savings rates are at unprecedented lows, and credit card delinquencies are surging, reaching levels not witnessed since the 2008 crisis. Unemployment rates are on the rise, and historical data indicates that once unemployment begins to climb, it often accelerates, resulting in further layoffs and decreased consumer spending. For those attempting to forecast a recession, the economic indicators such as rising unemployment, weak consumer sentiment, and increasing delinquencies suggest a potential downturn. The pressing question remains regarding the magnitude of the upcoming recession. Meanwhile, the housing market, particularly in regions like Florida, appears to be experiencing a bubble. Homes in areas such as Pels Park, Florida, are priced 30 to 40% above their long-term values. For example, a 2-bedroom, 1-bath house is listed at $310,000 in a neighborhood where homes likely sold for $50,000 to $60,000 during the last downturn. This level of overvaluation echoes the conditions of the 2007 bubble. Walmart's financial performance plays a critical role in understanding the broader economic landscape. It illustrates that not only low-income households, but also middle and high-income consumers are tightening their budgets in response to rising inflation, particularly in grocery prices. In Florida, grocery prices have escalated by 20% over the past 3 years, while rent has surged by 25%. Although prices are beginning to stabilize, they remain excessively high in relation to local wages. In conclusion, Walmart's thriving performance during these challenging times does not bode well for the economy. It underscores the increasing financial strain on consumers, paralleling trends observed during the 2008 financial crisis. While companies like Walmart benefit from the discount model, others, such as Home Depot, which are more vulnerable to fluctuations in the housing market, are experiencing difficulties, suggesting a potential economic downturn on the horizon.